Hey everyone, just a very quick update on what's been going on this week. It's been a very interesting week, and we also have an update on the US inflation numbers. So let's focus a little bit on the US inflation. We want to take a look at the PPI year on year. We actually had a little bit of an increase from 2% to 2.2%. The consensus was 1.6%. The core CPI month-on-month growth is from 0.2% to 0.3%. The monthly CPI growth, it drops down a little bit, 0.7% to 0.5%, but it is higher than the consensus of 0.3%. The core PPI also increases from 2.5% to 2.7%. The market was expecting a drop to 2.3%. Now that leads up to the CPI numbers overnight. So it wasn't really much of a surprise, in all honesty, because the PPI does point to a little bit of an increase in producers' cost of production, and that would translate to higher consumer goods, obviously. And that's basically what we get with the headline inflation number. The consensus was 3.6%. We have a stable rate at 3.7% for the headline inflation. Core inflation does come down a little bit from 4.3% to 4.1%. This is as per consensus. In terms of the monthly growth, it is slightly higher than what the market's consensus is. And that leads up to the current situation in the U.S. in terms of what the FOMC perceive as, is the inflation still going to pick up? Are they going to have to continue hiking rates? And the previous release FOMC minutes points to a little bit of a concern to the economic growth in the U.S. should they continue to hike interest rates. So it was a little bit more of a dovish comment. Now, if we take a look at the market, I want to point out first onto the commodities. Let's take a look at gold here. For gold, we can see the progress for gold here is that it has continued to rise up for gold, and technically we are above the Ichimoku cloud on the hourly time frame. So on an intraday basis, we're still looking at an opportunity for gold to continue to pick up. Obviously, we are focusing on two levels for gold. That would be at 1895 to 1900. This is going to be the estimated resistance for gold. It will actually fall onto the third resistance on the daily pivot. It'll fall between 1896 to 1900, which is yesterday's resistance 3 on the daily pivot. Now, it's very hard to make a call to short gold at this point in time. Technically speaking, obviously, we are in an uptrend in the short term. And with whatever is going on in the Middle East right now, it does add to a little bit of a safe haven run. So it's really hard to make a call to go short on gold. And in fact, if we take a look at the movement overnight, post CPI numbers, it does dip down below 1875, but it never actually crossed below the Ichimoku cloud. And in fact, it just kind of skirted on the top of the Ichimoku cloud and continued to bounce off. And the current progression seems to be a little bit of an extension to the upside. And if we measure that extension, the 127.2% is actually going to fall at resistance to about 8090. The 161.8% is actually pretty much at 8095. So that's kind of the estimated projection for gold. Now, we also have a little bit of an update with what's going on in Israel and the Gaza Strip. In fact, the United Nations just came out with a warning that Israel military just announced to evacuate, for anyone in North Gaza to evacuate to southern Gaza within the next 24 hours. Obviously, this kind of triggers the market that there might be a potential for ground troops from Israel moving into the Gaza Strip, right? So it could happen in the next 24 hours, and we can see a little bit of a knee-jerk reaction for gold here, and also on oil, which is have been our focus for this week. We are really concerned about the current situation in the Middle East, that it could affect the supply for oil, especially ones that's coming out from the Middle East as well at this point in time. So it could put a lot of pressures into the oil prices there. And obviously, we are also going into winter. We already published a video giving you guys a few reasons to consider what's considered for oil. But right now for oil on the hourly time frame, this is attempting to break the Ichimoku cloud, and if it does so, it will close above $85. And if there's an hourly close above $85, it would trigger further run to the upside. We are looking at a potential return back towards 86, 87, and potentially creating a new high for the week, potentially surpassing 88. So I think there's a lot to go on for oil, and if we measure it on the daily time frame, there's also a note here. The previous drop, that was because of the supply output, which was in the report we published yesterday. The downtrend has been broken on the daily time frame, but we're still looking at a potential bounce from the 81.84. In fact, we didn't actually get that low. It did touch that region where around $82, and then it bounces off yesterday, and today we're seeing a little bit of a rally. This is currently back up above the Ichimoku cloud, so we could actually see a little bit of a continuation to the upside for oil. Now, we talk about the impact on the inflation number that comes out from the US. What is that impact on the EURUSD, for example? If you take a look at the movement on the EURUSD, it cleared below 1.0575. So this is the exact moment it actually progressed below the Ichimoku cloud. That's when it's the CPI number was actually released overnight, and the market got pushed down, and it did close below 1.0550, but it did not clear below 1.05. So technically, we still have a very strong valid support for the EURUSD, and it's currently testing 1.0550, and might actually retest 1.0575. And obviously, that's going to be what our focus will be for today. If price is able to close back up above 1.0575 on the daily time frame, it would put this in a little bit of a sideways market lock. It would create a little bit of an environment where the EURUSD could actually just move back and forth between 1.0575 to 1.0625. So right now we are looking at a little bit of a floor on the EURUSD, and we could see market pick this up to test 1.0575. So maybe intraday opportunities. We're not going to be looking for a short trade, at least not on Friday. We might see that on Monday if price did not close above 1.0575. But again, things could change. There's a lot going on in the market right now. So if things intensifies, it could kind of create a little bit of a safe haven run for the US dollar as well. So, that's the consideration that we need to go ahead of the weekend. And for the pound USD, this one here also bounces off 1.22. So we do see that pullback on pound USD here, but it's kind of coming back to the low that was created on Monday, and we didn't clear off below that low. So technically, we still have a little bit of support for the pound USD. In terms of resistance intraday wise, we are currently at resistance at the weekly pivot level, at the daily pivot level, which is at 1.2230, and our resistance is going to continue to build up all the way up to 1.2550 for pound USD. So this is kind of a little bit in a sideways market condition. That could be one scenario where if you're thinking, all right, maybe we could go long on the pound USD, do keep in mind any stop losses would have to be below 1.2160. Ideally, it would be around 1.2150, and then we need to adjust in terms of target. Is it going to provide us with a good risk reward ratio? That's the current consideration for Friday. Now for the Aussie USD, this one here is a little bit weaker because for the Aussie USD, things are a little bit different. Unlike the pound USD and the Euro USD, this one here is currently creating or forming a little bit of a potential flag on the Aussie USD. So this is actually more of a bearish flag at this point in time. And if price does not come back up above 63.50, we could actually see a little bit of rejection building up around 63.50 or coming closer to 63.50, and we could potentially see a breakout of this bearish flag. So for the Aussie USD, this one here is still a little bit bearish, unlike the Euro USD and the pound USD. Now lastly, let's talk about the Dow Japanese yen. For the dollar Japanese yen, I think we're still going to be looking at that grind towards 150. So it's still not off the table yet. If we take a look at the price movement overnight on the dollar Japanese yen, it actually managed to close above 149.50 yesterday, and it's currently trading still above 149.50. And 149.50 is going to be the daily pivot level for dollar Japanese yen. So again, very similar situation with how it's forming on the Aussie USD. We could potentially see a little bit of a flag forming here. As long as price is still trading above 149.50, we are still going to be looking at a trajectory for dollar Japanese yen to pick up and run towards 150 and potentially still spike above that level. But yeah, given the current situation with the whole inflation in the US, in terms of monetary policy decision, it kind of puts the FOMC in a little bit of a tough place, because it would still need to consider that the inflation is actually not coming off, and it just creates that gap between what the Bank of Japan is doing from their monetary policy decision and in terms of what the FOMC is currently doing and what they will potentially be doing. So we're still looking at the potential run for the dollar to go stronger against the Japanese yen. Just looking at the fundamentals, just looking at the consideration between the two monetary policy, we're still looking at a potentially stronger dollar versus the Japanese yen. Obviously, the only thing that could stop the knee-jerk reaction to the upside is because there's that concern for potential intervention coming out from the Ministry of Finance in Japan. And that's pretty much it. That's pretty much what's capping the dollar Japanese yen from progressing any higher at this point in time. So with that, good luck with your trades. Have a fantastic weekend ahead. I'll see you Monday.